Okay, we are recording. So in this recorded lecture, we're going over chapter 3. And chapter 3 focuses on how we accumulate and record labor costs. Okay, so we're looking at chapter 3 now, and I'm going to get my screen pulled up. So remember, we said that the three main manufacturing costs are direct materials, direct labor, factory overhead, right? So in chapter 2, we talked about accounting for materials. And now in chapter 3, we're looking at the calculations and the journal entries and stuff that we need to record labor. And of course, we're going to get practice with these in class together. So some of the labor cost issues that we have to think about and that we'll talk about as we go through the PowerPoint, how can companies control labor costs in a highly competitive global environment? What incentive wage plans can be put into place to ensure that workers are compensated for adding value? How should bonuses, holiday pay, and vacation pay be accounted for? So those are some of the things that we're going to be looking at as we go through this chapter. So factory payroll, again, thinking about factory payroll, we think about direct labor and indirect labor. So remember, direct labor are those individuals like on the assembly line or in the manufacturing facility turning raw material into a finished good. So direct labor, and it shows here, also known as touch labor. Again, they're touching the raw materials, they're touching the materials, they're turning them into a finished good, right? Whereas indirect labor consists of labor incurred for a variety of jobs related to the production process, but not easily traceable or readily traceable to an individual job. So some of the examples that we used for indirect labor, again, the factory supervisor salary. The factory supervisor is not necessarily on the assembly line turning raw materials into a finished good, but it is related to the production process, so it's an indirect labor. Or, excuse me, if we have, factory maintenance person or factory maintenance people, they're not actually turning raw materials into finished goods, but they are part of maintaining the production equipment, right? So that's considered an indirect labor. You could say the same thing for like a cleaning service. So if we have a cleaning service, come into the factory every night and empty trash cans and wipe off, windows and doorknobs and desks and things like that, they're not actually turning raw materials into a finished good, but they are related to the factory and those processes. So that's considered indirect labor, right? So when we accumulate factory payroll costs, we're accumulating not only direct labor, but also indirect labor. And so just like we've seen with the material journal entries, remember for the material journal entries, direct materials we debit to work in process, indirect materials we debit to factory overhead. And so that's the same thing that happens here with labor. Direct labor costs get debited to work in process. Indirect labor costs get debited to factory overhead or manufacturing overhead. And we'll see examples of that. And then, like I said, also get practice with it. So the accounting system of a manufacturer, needs to include, of course, the procedures for recording payroll costs, not only for direct labor, but for indirect labor. And then also the payroll, function comes into play and calculating, employees' earnings and deductions and things like that. So some of those procedures for recording payroll costs include recording the hours worked or quantity of output by employees in total and by job, process, or department, analyzing the hours worked by employees to determine how labor time is to be charged, charging payroll costs to jobs, processes, departments, and factory overhead accounts. And then, which when we say charging payroll costs to jobs, processes, and departments, that would be direct labor. And then to factory overhead accounts would be the indirect labor, right? And then preparing the payroll, which involves computing and recording employees' gross earnings, withholdings, deductions, and net earnings. So for those of you that had me for principles of accounting too, I know for sure we got a lot of practice with payroll because I think we spent, you know, at least 4 or 5 weeks working on payroll and, you know, getting practice doing the calculations and the journals and entries and stuff. And you'll probably be, you know, delightfully surprised to see that those calculations and those journal entries are really mirrored in this chapter. So, you know, again, for those of you that took principles of accounting 2 with somebody else, I don't know what you learned, but either way, we'll get practice doing it in class together. All right, so hourly rate versus piece rate plans. We talked about this again in Principles of Accounting 2. An hourly rate plan establishes a definite rate per hour for each employee. So, for example, if we have an employee that makes $15 per hour and they work 40 hours, well, 15 times 40 is 600. So they would have gross pay of 600, right, before taxes and deductions. A piece rate plan bases earnings on the employee's quantity of production. So, you know, for example, we might pay, you know, I don't know, maybe we pay $1.50 per unit produced. So if an employee produces 100 units in a day, then that day's pay is $150, right? So that's a piece rate. And then a hybrid kind of the two, or the modified wage plan, combines some features of the hourly rate and the piece rate plan. So, you know, this is similar to if you think about like how sales people are paid. Salespeople are usually paid a combination of salary and commission. So the salary would be like the hourly rate, and then the commission would be the piece rate plan. So you know, they have like, you know, a guaranteed, they make, you know, $15 per hour, but and maybe that $15 per hour is, you know, to produce 100 units, but anything over 100 units, then they would get like an extra pay for the piece rate portion of that. All right, so controlling labor costs. So the timekeeping and payroll departments have responsibility of maintaining labor records. You know, generally speaking, this is a lot more simple with, you know, some of the electronic devices that are used nowadays, because, you know, a lot of times companies nowadays, like I know my friend works at an elementary school here in the St. Louis metropolitan area. And so when they clock in for the day, you know, they get on their phone onto an app and they clock in on their app. And my husband's job is set up the same way. You know, they clock in and out on their phone, basically. You know, sometimes it's, you know, kind of like a little machine that hangs on the wall. And to clock in, you know, you scan your ID under it. To clock out, you scan your ID again, type thing. So a lot of this timekeeping is done electronically nowadays, but we still have to maintain, you know, some type of labor record, whether that's an electronic record or what have you. And just like it shows here, the labor time record shows the employee's time spent on each job, as well as the time spent as indirect labor on machine repair. Because remember, the time spent on each job would classify as direct labor, whereas if an employee spent time repairing a machine or doing something like that, that was indirect labor. So direct labor would then be charged to work in process. Indirect labor would be charged to factory overhead. All right, so here's an example of a labor time ticket or a labor time record, and it just shows this employee Logan Walters, employee number, you know, what the employee's classification is, hourly rate, and then what this employee worked on these different jobs. So, you know, if you see, for example, on Monday, looks like spent most of the day on job 402 and then 1 hour on machine repair. And Tuesday divided time up between the two jobs. And you know, Wednesday, Thursday, Friday, I mean, you can see the numbers here, and how that's calculated. You know, again, this person makes $15 per hour. So to calculate gross pay, we would take, you know, 39.5 hours times $15 per hour, right? And then so we see a payroll record here. Again, for those of you that had me for Principles of Accounting 2, this should look somewhat familiar to you because we got a lot of practice doing these calculations together. So we look at, you know, total earnings, and then from our total earnings, we can calculate FICA taxes, both Social Security and Medicare, right? And then income taxes, and then any other deductions that need to be taken out to then arrive at net pay. So, you know, if this is something you did not cover in depth in Principles of Accounting 2, like we did last semester, then, you know, don't worry, because we're going to get practice with it together, right? We're going to get practice doing it together. All right, so labor costs. So cost accountants examine the labor time records and charge the labor cost to the appropriate jobs or departments and to factory overhead. A labor cost summary summarizes the direct labor and indirect labor charges to a department for the period. And so we see a labor cost summary here. We see the direct labor that is gets debited to work in process. And then we see indirect labor here that gets debited to factory overhead. And then we are able to calculate our total payroll in each of those instances. All right. So the labor cost summary becomes a source for making the follow general journal entry. Again, I've mentioned this a few times. We saw this in chapter 1 as well. So for direct labor, we debit work in process. For indirect labor, we debit factory overhead, and the credit is then to, you know, they're showing us payroll here. I've also seen it called factory payroll. I've also seen it called factory wages payable. So, you know, it just depends what accounting textbook you're looking in, but this is that journal entry for recording labor costs. All right, so this just kind of shows us how all of these things relate. So from the labor time record, we can determine direct labor charge to a job. We can determine factory overhead charged, and then we can determine the labor cost summary, both direct and indirect labor. And that's what we would use then to update our ledger accounts, which then update, of course, the general journal. All right, so employees' payroll taxes. So, you know, again, if you had me for Principles of Accounting 2, we spent a lot of time on this, so this should be familiar to you. If not, don't worry, we're going to get practice with it together. But payroll taxes are imposed on employers, and they include Social Security tax and federal and state unemployment tax, right? So FICA, that includes Social Security and Medicare, and then FUTA and SUTA, right? So just like it shows here, employers must periodically report and pay the following taxes to the appropriate government agencies. And if you recall from Principles of Accounting 2, we pay these on a quarterly basis. So generally speaking, you know, January through March is due April 30th, and April through June is due July 31st, and July through September is due October 31st, right? So it's always like the month following the end of the quarter. And so the employer payroll taxes include not only the portion of FICA, which again, it's what, 6.2% for Social Security and 1.45% for Medicare. So not only the federal FICA, Social Security, Medicare taxes, but then also FUTA and SUTA, federal unemployment taxes and state unemployment taxes is what FUTA and SUTA stand for. All right, so payroll accrual, again, we've gotten practice with this. I think before, at least I know those of you that had me for principles of accounting and or intermediate accounting, we've gotten practice with this before. So, you know, this is essentially where, you know, we've got to close the book. Say, for example, what are we in now? We're in August, so July 3rd. So we got to close our books on July 31st. And this is not a great example because July 31st did fall on a Friday. Okay, but let's say that we have to close our books at the end of the month and employees have earned wages, and maybe the end of the month falls on a Tuesday, right? Maybe the last day of the month is on a Tuesday. So employees have earned wages, but we're not paying them maybe until that Friday. So we're going to essentially accrue the payroll, accrue the payroll expenses, right? So we're going to recognize the expense earned in the month ending, but then they're not going to be paid maybe until that Friday, which is, you know, the second or the third of the month or whatever, right? So it would just stay in like a payable account, generally speaking, wages payable or salary and wages payable or factory payroll payable, you know, something like that. It would stay in the payable account until payday. At that time, we would like debit cash credit or, debit the payable account, credit cash. All right, special labor cost problems. So shift premiums, pensions, bonuses, vacation and holiday pay. I mean, basically, in a sense, these things generally just get charged to the expense, salary and wage expense, right? So pensions, bonuses, vacation and holiday pay get in a sense charged to the expense. In some cases, however, like a shift premium or what is also known as a shift differential, like in a manufacturing facility, like if they, and this is the example your book gives us, say they have, you know, 3 shifts in the manufacturing plant. Maybe first shift is 8 a.m. to 4 p.m. Second shift is, you know, 4 p.m. until midnight. And third shift is midnight till 8 a.m. Well, those people that work second shift get paid a little bit of extra. And those people that work third shift get even paid a little bit more extra. And the reason why companies do that is because like most people want to work during the day and have like a normal schedule, like a normal life at night, right? So they pay people extra shift premium or shift differential to attract more people to those shifts, right? Because although there's some of us that are night owls, you know, most of us want to work during the day and have the normal kind of work schedule. But in these cases, that shift premium, especially in a manufacturing facility, that shift premium is usually charged to factory overhead. So, you know, again, in a manufacturing facility, shift premium is usually charged to factory overhead. Bonuses can also maybe be charged to factory overhead, but I mean, generally speaking, it just increases, each of these increase the salary and wage expense. Okay. So we are through our labor. Hi there. we are through our chapter 3 on recording labor. Again, hopefully this was a good overview for you. Of course, we're going to get practice with these calculations and these journal entries and such together in class, which I look forward to. Definitely, I enjoy, you know, more than going over PowerPoints. I enjoy actually doing the calculations and the exercises. That's the more fun. That's the more fun part of it, right? All right, guys. Well, have a good night. I will see you soon. Bye-bye.